Let's go over here and watch this baby. Man, my throat is so itchy.
Every trader is
Oh,
taught
that
to
was
use
loud.
indicators.
I'm sorry, chat.
And
Was that
virtually
loud?
all of them are using them in a way that's flat out wrong. In this video, you'll discover why and how. Nearly every trader is taught to use indicators, and virtually all of them are using them in a way that's flat out wrong. In this video, you'll discover why and how to be one of the traders in the top 1% actually using them correctly to make profitable trades. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City and proud to have developed numerous 7 and even 8-figure per year traders. Watch, take notes, and learn from a professional trader on our desk so you can grow your trading account.
We're here with Garrett because he has some really bold thoughts here, and we want to get into it.
What if I said everybody on the internet is wrong about indicators? That almost nobody has it right. Indicators seem to really stir people's emotions. It's a polarizing subject. It's like kind of like the politics of the trading world. Everybody has a strong view. It's become such a lightning rod, I feel, that it starts to lose its meaning after a while. And it's actually amazing to me that something so mathematical, so fundamental can be the cause for such debate. And look, that's great. I like
It's actually a good point.
I love debate.
That's a good point. You know, people argue about my indicator's better, my indicator's better, my indicator's better, my trade plan is better because I use this indicator this way and you use this indicator the wrong way, and they fight about it. Bro, there's no right or wrong way. It's math. It's effing math, okay? It's simple formula. Put in number, get an output, use that output number to help you form some sort of a thesis to get a trade. Right? But people just fight over this shit. It's pretty funny. That's a good point, though.
I'm sure I'll get all kinds of backlash in the comments, and that's okay. You know, what kind of boring place would the internet be without controversy and passion?
Yeah,
right,
good
Jeff?
point.
So, do indicators have real value? What are their value? What are indicators really for in trading, and how do they actually help us? And I know a lot of you get it. I get thoughtful emails from traders all the time, but something needs to be outlined, organized, established. Indicators are too fundamental to let them remain just some enigma or magic potion for trading strategies. So today, in this video, I want to tell you what indicators actually are and how to use them. And in the end of this video, I'm going to share some back tests from a real algorithmic model that we're developing in order to demonstrate the power.
That's interesting.
So where are people missing the point? There are a few arguments I hear all the time. First, there's the anti-argument. So like indicators are useless, right? But this is wrong. Indicators are universal statistical tools. Those who say indicators are lagging are missing the point. Everything in trading is lagging. There's no crystal ball at all. Like all we have are
I got 2 crystal balls.
Probabilities and risk reward, expected value, and different ways to quantify in order to set rules, in order to capture those risk rewards and probabilities, right? We never know what the outcome is going to be.
Yeah.
And then on the other hand, there's the pro argument. Indicators are the answer to my trading problem. Those who say indicators are magical tools, those searching for the single perfect indicator that will turn
the holy grail indicator.
All trading
I used to be that guy. I used to be that guy. I used to, back in the day when I found out what the VWAP was, right? What the VWAP indicator was, I was like, yo, this, before I knew what VWAP was, when I just knew, like, you know, how to put it on indicator on a chart and how I would put on the VWAP indicator, I was just learning about trading. I was like, this is the magic indicator. This is the indicator that's going to help me buy a Lambo. I'm going to call it the Lambo indicator, right? Because that's the Lambo. That's my gateway to a Lambo. And that's what I thought the VWAP was. And then eventually you learn more. And then you're like, wait, VWAP is just telling you what the best price could have been, what the premium price should have been. And anything less or above that is not as good of a price. So that's what VWAP tells you, and then you kind of understand to formulate trades around that area. But beginner traders, new traders, retail traders who are still not really there yet, they're all just like hunting for that holy grail trade, holy grail setup, holy grail indicator, which is kind of like the holy grail, just doesn't exist.
About it the wrong way. Indicators are not strategies. They are certainly not magic, but they're not strategies. And I think that's a really important point to make here. So what the hell are they, and why do we use them? Number one, indicators are features. And this is not a term I made up. This is a technical term used in machine learning and model building. And to illustrate
it's a
this
feature.
Point, instead of thinking...
It reminds me of my day back in when I was a software tester. And anytime I found a bug in the software, reported to the engineer who coded it, he would say, it's not a bug, it's a feature.
Thinking about building a strategy, think about building a car. So you'll want to decide when you're building a car which features to build into this car so that it performs optimally. And this will depend on the purpose of the car. Will it be driving off-road in the snow? Will it be racing on pavement? Is it for the family? Is it for a car show? So for some applications, four-wheel drive or anti-lock brakes can enhance a car's performance or safety, but none of these features alone make a complete automobile. So in the same way, a single feature is not a trading strategy.
Okay.
But it can improve the expected value of a trading strategy by handling an important aspect of the strategy, an aspect that we want to quantify. And just like with our car, whether or not a specific indicator will improve our expected value depends on the strategy and the market environment. You might find that defining volume in a certain way and limiting your
you think these traders like being filmed?
Threshold of this variable,
they're probably so pissed off. They're like, dude, get away from me.
You might
I'm trading.
find that defining momentum in a certain way and scanning for the highest values of this variable improves your win rate significantly. Or you might find that neither of these indicators helps your strategy in any way because these indicators are not measuring the variables that drive your expected value, right? So like heated seats are awesome in a car, but not in Florida. So just like with the car, there are probably going to be a combination of features that define your strategy. The second point is that indicators are just statistics, just a way to organize data. And that's really it. They're the same classic statistical tools that scientists use to study bird migration patterns or whatever else they're doing, right? So distributions, mean, median, mode, standard deviation, normalization, derivatives, like all of these things, these are not unique to trading. So every indicator is derived from these classic fundamental statistical tools.
So one thing you're saying here is instead of looking at the indicators as guidelines or as a guiding look forward, we should use them from the context of studying the price action based on the indicators and what the indicators are telling us?
Yeah, that's a great way to look at it, I think, because, I mean, look, like, it's not so much I found...
Why does their background look like it was taken from SpongeBob, bro?
My secret weapon.
These are
it's
SpongeBob,
like this.
Hold up, you guys gotta see this. 5 years later, SpongeBob. See what I'm talking about? You see that background? You see those backgrounds? Doesn't that look like that?
Strategy. And there are things about it that I need to quantify in order to find out if certain variables give me any edge. And so in my search for the ability to quantify this thing, I'm going to actually have to stumble upon indicators or features, right? So just like we kind of gave that list of the statistical tools that the scientists use, like in trading, we have the volume profile as a distribution.
I like volume profile.
Control is a mode. Moving averages are a mean. Bollinger Bands are a standard deviation. ATR is used to normalize price moves by volatility and so on. All right, so how do we use indicators? Okay, so number one, like understand what they're measuring. And I know, Jeff, you're like really big on this because like you always tell the new class, like you got to know like how this thing's built. Like
every trader, it's one of my pet peeves. Every trader that puts an indicator on your chart, you need to understand the basis of what that indicator is measuring. You have to understand the situations in which that indicator is helpful and when it's actually taking away some of the edge in your trade.
Yeah, and we want to do this because we want to have the option to use the tool, right? And to quantify a very deliberate dynamic in a specific situation and a specific strategy. All right, so curiosity leads to invention. So I always think about, like, what am I trying to quantify? And then I go try to quantify that thing and then test that variable and learn if it improves the expected value or not for my specific strategy. So it's all just math. And if we learn the math behind it, we can kind of like demystify the whole indicator thing.
So you take an indicator and you just put it on the chart.
No.
You take a strategy and you think about, or you filter down what indicators might be applicable to that strategy.
Yeah. Yeah. And a lot of the way that happens a lot of the times is I'm thinking about like a variable first. Like every time I see this trade go off, I see an increase in volume. Like, gosh, like I wonder if I could like somehow find out if there's something I could measure that would guide me to filter out the bad trades and get the good trades, right? So now then I start to look at different ways to measure volume, and like here we are, like looking at, volume indicators.
So you start with a purpose, and that purpose isn't driven by what does this indicator do and when does this indicator apply. It's driven by what's happening in the price action, and then you're instantly filtering out a ton of indicators or features by doing that.
Yeah.
Yeah.
And then you're getting down to a very short list very quickly.
Mm-hmm.
It's like
Because when people say
10,000
indicators,
stocks
a
in
lot
the
of
market.
times, when you say which indicators will work on a back test, we have 700 indicators that are coded into our system to be able to pull and back test on.
That would be hard.
That'd be a lot.
Yeah. Let's go over an automated strategy that we're building and show how the addition of the right feature can make or break the strategy.
Okay, let's see this.
We needed
this
to
is pretty
quantify
interesting.
something about the strategy, right? So we had a theory and we needed to test it. And it was an indicator that allowed us to quantify this thing. So I'll show the back test and then we'll demonstrate how this affects the performance of the strategy.
And I hope we can talk about the strategy too.
Yeah, we can. So here we have a back test.
All right, what am I looking at?
This was an initial back test for a strategy idea. And this particular strategy is an intraday long strategy.
Lost
buying large
30K
gap
in
downs
like
in individual
13
stocks,
days.
where we have a specific execution
But then
algorithm around
started
these signals, but we have
Reversing it.
not
ended up
really defined any
30K?
environmental aspects of this trade. So we kind of have an execution style, and we know we want to buy gap downs, and it's actually doing okay considering like how little we've done to it here. But you can see like this is not really anything you want to trade, right? Like even though it ended up positive, like that's a pretty big drawdown. That's not like totally what we want to see. So the thought here is this is a mean reversion strategy. Right. And we don't kind of know that for a fact. We're just thinking that way because that's kind of how we look at the market. We might actually be proven wrong. Right. So we wanted to test whether the stock being more extended to the downside helped the expected value of the trade. Because again, these are gap downs. Right. So it's like we can measure like how far the gap or on a higher time frame, on a shorter time frame. So we have to find a way to quantify extended so that we can test this. So let's think about measuring how many ATRs the stock is from a long-term moving average. And this helps us measure whether being extended on the higher time frame after a big gap has any bearing on this strategy. So a Keltner channel, which is something we've talked about before, measures ATRs from a moving average. So we built a form of this into the script and looked at this variable against our P&L. And we studied whether the amount of ATRs from this moving average correlated with the performance.
And more specifically, doesn't the Keltner channel measure the standard deviation in terms of ATRs?
The Bollinger Band studies standard deviation, and the Keltner channel studies ATR. And if you kind of look at them, they're the same. Like they're achieving the same thing. So someone else could have decided to study standard deviations away from the moving average and might have come up with the same exact outcome.
But you're still getting it down to this very short list.
Mm-hmm.
Okay.
Yeah. And so we found a threshold of ATRs where performance dramatically improved. And we can see that in this second back test that we ran. So we basically found that if it was extended a certain number of ATRs from that moving average, then beyond that threshold, the win rate and the risk reward went up.
That's pretty
lot.
crazy.
So we basically filtered out anything that was
TH, Happy New Year, sir. Happy New Year.
And again, this is all in sample data. So, you know, this is the testing phase, right? So you have to test it out a sample after you've studied it and stuff, but we're just studying it, right? We're just getting ideas. We're kind of knocking things around, like getting to understand the data. So now we can understand that there's a mean reversion element to this trade, where before we kind of thought there might be, but now we're thinking, okay, like there's this seems to be mean reversion. Like, why do we think that? Because we're kind of seeing that the more extended it is, the more it tends to bounce back. So we went one step further and we saw that the magnitude of this ATR extension.
Whoa, we got a subscriber. What's up, Lori666?
And what that
Thank you for subscribing. Welcome to the Trader Prad family. Appreciate the subscribe.
The better the P&L got. So what we did was we scaled the risk based on the number of ATRs. So the more ATRs, the more we're going to risk. Okay. And we increased the ATR threshold slightly as well during this backtest. And this further improved the expected value. You can see on the chart, it actually looks very similar, but the drawdowns are less. And you can see things like the Sharpe and the comma ratio and stuff like that are a little bit better. So after all this, like after I've kind of knocked both sides of the coin and said that, you know, indicators they're not nonsense, but they're also not magic. Like, what is the grounded response to learning about indicators? Like, in my opinion, is, you know, and this is the attitude we kind of see on the desk a lot, is like, hey, like, I wonder, when you learn about an indicator, I wonder if that might help me quantify something that matters to my strategy. Like, I wonder if this might help me build an alert, help me filter out favorable environments for my trading signals, more clearly define my entry signals so that I don't make up trades, which is something you talk about, Jeff, all the time.
Making up trades. I've been guilty of that many times.
You know, maybe it doesn't do any of these things, right? It's absolutely true that most indicators won't help your strategy, but one or two might. And this is why we learn about all of them, so that we kind of have them in our arsenal and we're able to employ them when needed. So on our desk, it's very clear to me that there are many ways to make money. Like, there's no single way to do it. There's not really any sense in being dogmatic about any one trading approach. So, you know, push back. If you disagree, let us know if you think indicators are useless. Let us know if you think they have been the answer to your trading as well. And if, you know, we can continue to debate around the subject. And also let me know if you like it when I provide real backtest examples, because this is something we can do more often if people get a lot out of it.
So you're an active trader, not doing.
So that was a pretty simple video. I mean, more basic video for some of you guys. Some of you guys don't even need to see this. I kind of didn't need to see this. It was a good refresher, though. It was a great refresher as to, you know, what to expect, what not to expect from like someone who's talking about it in terms of a prop firm scale, right? These guys are a big prop firm. They train a bunch of traders and so on. So they're kind of explaining to you on a dumbed down level what an indicator is, how you should even understand the indicator before you put it on a chart. Indicator is not a reason to trade, but it's a reason to look at the stock at that level and then help your setup. If you have some sort of a setup, a bear flag setup, or some sort of a bull flag setup, or a cup and handle setup, or some sort of anchor VWAP setup, whatever your setups are, whatever your playbook is, you use that indicators to help you facilitate in your setup. But just because the indicator is telling you something to do doesn't mean that you do it, right? That's not enough of a reason to make a trade. An indicator is not a trade itself. That's what the video was talking about. Pretty good video overall. I liked it. Good refresher. Hopefully you guys got to